Hey guys, Jared Wesley here of Live Traders. I hope you guys are doing well out there. Today I have two important topics that I want to discuss with you guys because honestly, I'm just getting tired of seeing people shoot themselves in the foot and just do really stupid things. I understand why it happens sometimes. I've seen some of these other educational courses out there where they say, buy the stock right here, put your stop loss down here, and then the target's up here. Boom, it's magic and you make money. That is not how it works in the real world, guys. When you talk about spreads, when you talk about liquidity, when you talk about level two. So today, I want to spend a little bit of time, not too long, talking about liquidity, talking about spreads, and talking a little bit about how to get filled, because I've seen far too many of you guys, when you send me an email or you send me a private message here or there, etc. and so forth, or you comment in these videos about a trade that you took at a certain price point and that you got skipped on it, or a trade that you wanted to take at a certain price point and then you show me where your stop loss is and I look at the spread and I'm like, well, wait a second, the stop loss and the spread are the same size. How is that possible? All right, so I want to talk about those topics today. We're going to head over to the computer here, guys, in just a second to discuss that, because look, this is a serious business and there are far too many hackers out there. And the one thing I want to impart on you guys today that I hope you get is that there is a gap in this industry, particularly on the education side, a gap between theory and reality. Okay, I'm a reality trader. I trade real money, account open, order number open, originator open. Nobody else does that. I do that. So I can show you how it really is in the real world, getting skipped on trades or having a spread that's too big. It makes the stock almost untradeable. Okay, so those are the topics I want to discuss today. Before I do so, though, if you haven't already done so, go to livetraders.com, guys, and download this free ebook. Okay, livetraders.com/ebook. It's a free electronic ebook, hence ebook. Okay, it's 85 pages of awesome, wonderful, incredible information. Not fluff, not marketing, just good stuff. Okay, so without further ado, guys, let's go to the computer and talk about this very, very important topic. All right? Okay, guys, so like I said, this is a really important topic. And the topic specifically, guys, is not only how to get filled on trades, but how to understand a stock with regard to the spread. Okay, everybody wants to tell you buy it over here and sell it over there, but they don't want to teach you how to get filled on these trades. So I want to blow up this a little bit, okay, on VMW. All right, and you can see these are my fills today, guys. Anybody that's not sure about it, blah, 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 filled orders, and over here is where the money is, right? Order number, account number, originator number, commission, blah, 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 blah. So I'm not even going to spend much time on that, guys. I don't think I need to prove myself at this point because I do these videos all the time. Wasn't a great day. I only made like 350 bucks or something like that. Anyway, the reason I'm doing this, guys, is today in the Live Traders chat room, I got a question. I'm going to put the question on the screen here so you guys can see it, and then I'm going to talk a little bit about the specific symbol that this person was talking about or referring to, which was VMW, okay? So here it is, guys. Let me read the question for you guys. It says, Jared, I got in VMW at the market open at $178.08. and got out after getting 2 to 1, which is 2R, which means 2 to 1 on my money, at $180.09, and it went to 183 afterwards. Do you think there was a better way to manage this trade? Okay, so first and foremost, all right, this trader is automatically thinking incorrectly. Okay, and let me give you two reasons why. Number one, if your plan says 2 to 1, you sell it 2 to 1. If that is your target, you stick to it. Why? Because consistency is what makes money in trading, guys. Being intuitive and doing whatever you feel like doesn't make money in trading. Consistency does. So this trader is already asking the wrong question. If 2R is your target and you got 2R, you're done. Pat yourself on the back, be happy, move on. Enjoy the day, guys. You don't have to sit in front of your computer for 5 hours to make money. 1 hour is enough. Okay, 1 hour a day keeps the JOB away. All right, so that's number one. Second, and I'm going to put up a picture of the level 2 at the time. You can see currently, right, the level 2 only has about a 12-cent spread right now. All right, there's about a 12-cent spread. The buyers are at 178.01, just moved up, 178.07 by 178.20. So right now, VMW has a spread of anywhere from 5 to 25 cents. Okay, now you can imagine. All right, let's go to the daily chart here. You can imagine after gapping up over a big red bar and over a pivot that VMW would probably be a little bit volatile, whippy, and spready off the open today. Well, let me tell you, it was. It was extremely volatile, whippy, and spready off the open. So I'm going to pose a rhetorical question to you guys, okay? And if you can answer it while you're watching the video, kudos to you. What is wrong with this statement? That's the question. What is wrong with this statement? Okay? I got in at 178.08 and I got out at 180.09 with a 2-to-1 risk to reward. All right. Think. Right? Okay. Time is up. If you haven't come up with the answer, too bad. All right? That means this person got roughly a $2 gain out of this trade, right? Got in at 178, got out at 180, give or take, okay? So to make 2-to-1, what does that mean? It means this person's stop loss, their protective stop loss, was $1. $1, okay? Guys, right now you might think, wow, the spread is 20 cents right now in VMW. It's 20 cents, so $1 stop loss isn't bad. Guys, we're doing this video at noon, at lunchtime. When the market opened, which is when this person took it, and I mean they took it off the open. How do I know? Because it's the only place you could have gotten filled at 178. Let's take a look. All right, hold on. Let's take a look. There it is, guys. Right there. On the first minute of the day, this stock went to 178.40, pulled back to 177.45, and then ripped. Now, all of you guys are going, awesome trade, man. It went $5. Great job. And I'm sitting here, and I absolutely hammered this person. Hammered them. Why? Because they took a stop loss that was way too tight for how spready this stock was. Okay? They're basically, guys, their stop loss was the size of the spread. So that basically means, I want you to think about this, try to process what I'm saying here. That basically means if VMW did not hit and run immediately, they would have stopped out immediately. Think about what I'm saying, right? So basically, you look at the spread now, it's 14 cents. Basically, your stop loss is 14 cents. I get in at 178.04, and the buyers are at 177.90. That's where my stop loss is. Well, you stopped out as soon as you got into the trade, immediately, because your stop loss is the same size as the spread. That is utter insanity. That's not insanity. That's beyond insanity. See, there's aggressiveness. Then there's having big balls and brass in your pocket. And then there's stupidity. Okay? Stupidity. Never, ever, 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 ever take a trade where your stop loss is the same size as the spread. At a bare minimum, your stop loss needs to be at least 3 times the spread. Now, I understand the spread changes, guys, okay? It changes all the time. But at the open today, VMW had a very consistent 80 cent to $1 spread. What does that mean? That means this person needed to take at least a $2 to $3 stop loss minimum, because that's how whippy it was. Now, if they did do that, they probably still would have gotten a target, 2-to-1 target. If they took a $2.50 stop loss, this thing went $6. If they took a $3 stop loss, this thing went $5, okay? Something like that. But my point I'm making is I want you to pay attention to this, because there's so many of you out there are just suicide traders. You do things that are pure account suicide. Guys, yes, VMW worked today. And yes, this trader made money, but they won the wrong way. Imagine instead of this green bar, this red bar happened. See that red bar? That $4 red bar? Guys, we're on a 1-minute chart. It's a $4 red bar. What if that red bar happened right here? Let's say it triggered them at 178 right there. See that little topping tail right there? And then boom, the red bar came in. How much slippage do you think this person would have taken? How much slippage do you think this person would have taken? At least $2. So $1 for your stop, that's already the spread. And then at least $1 or $2 slippage. So instead of losing 1R, right, if you're risking $1,000, you would lose $1,000. This person would have lost $2,000 or $3,000 on this trade. Stupid is as stupid does, sir. That's Forrest Gump. You can't trade like that, guys. The reason I'm so emotional and so uppity about this and energetic is because I get these types of comments, questions, and emails almost every day. Jared, review my trade. What do you think of it? This is a suicide trade, guys. It's a suicide trade. All right? Yes, it worked, so this person is happy. And they didn't appreciate me hammering them because it worked. Guys, your number one job as a trader is account management first. Protect your account first. Everything else will fall in line after that. Okay? Everything else will fall in line after that. Okay? So, I put up the level 2 earlier so you can get an idea of just how spready this stock was, but trust me when I tell you. I know this because it was one of my favorite stocks today, guys. As you can see on the screen, I put out my favorites list every day. Today it was Autodesk, SPLK, VMW, eBay, and also Tesla and Vail. 4 of those trades triggered, and 3 of them worked marvelously well. 1 of them didn't. 3 out of 4 is not bad, 75%. Okay? So, please never, ever, ever, ever take a trade where your stop loss is the same size as the spread. Let's give a couple more examples. So if we go to Amazon, okay, the spread right now on Amazon is about 30 cents, right? 30 cents. So that means your stop loss at a minimum, and look at the spread open up on Amazon, opens up to 50 cents. Your spread, the stop loss on Amazon at a minimum has to be $2 or $3. At least that. Because the spread here is 50, 60, 70 cents. Okay, right now it's 50 cents. Minimum 3 to 1. And that's the minimum. I would prefer it 4 to 1. So if the spread is 50 or 60 cents, it's $2, $2.50. All right, let's go to Priceline, Booking Holdings. Look at this spread, guys. Take a look at it. The buyers are at 1703.24 and the sellers are at 1704.44. It's $1.20 spread. Yes, I get it. It's a $1,700 stock. That's not the point. If I bought this right here at 1704.04, 1704.44, I would immediately be in the red by $1. Immediately be in the red by $1. Okay? That means my stop loss has to be at least $3 or $4 on this minimum. I would prefer even $5 or $6 at a minimum. Now, you're going to get some stocks that are lower priced. For example, MAXR here has a 1 penny spread. So you could have a 4 or 5 cent stop loss on this, and that's okay, but not on Amazon. Okay, let's go back to it. Look at the spread. It's a big spread. For Amazon, it's actually pretty tight, to be honest with you. 40 cents right now. If I go back to BKNG, again, look at the spread. Wow, it's $1.20 still. It's $1.20. Stop loss has to be at least $4 or $5 on this thing. Do not mess with this, guys. Don't mess with this. Because when you're wrong, you're not going to lose 1 to 1. You're going to lose 2 to 1, 3 to 1, 4 to 1. Okay? Trust me when I say it. This is coming from experience, guys. All right? I'm just trying to help you guys stay out of trouble because account management's your number one job. All right. So, remember, never take a stop loss where your spread is 1 to 1. Okay? So, if you have a 20-cent stop loss, a 20-cent spread, your stop loss should be 60 to 80 cents minimum. Use the support and resistance on the chart. But if the support is too close, give it more room. All right? Now, I want to talk about something else, guys. I get so many emails from you guys where you're getting skipped on your trades. You're getting skipped. It's almost inexcusable to get skipped on trades. All right? You should almost never, very rarely be getting skipped. It will happen, just very, very rarely getting skipped on trades. So I want to bring up a couple slides. And this, guys, these slides are right out of Professional Trading Strategies. 550 pages of the best information on the planet. You're about to see 3 or 4 of those pages. Okay? Yes, you're welcome. All right? So here we go. So let's take a look, guys. All right? I'm going to pull this up, and I want you guys to take a look at a couple things right here. Okay. Ain't that pretty? Or isn't that pretty? Right? Right here, MNST. And it shows, move that over. It shows right here, entry over $150. And this is right where you get all of the information from all the other educators out there. Buy MNST over 150 and put your stop loss at 149.65 and then boom, ride the gravy train to riches. Bullshit. Okay? Bullshit. Sorry for the language. That is theory. Let me show you reality. What you're seeing here is theory. Is it a great pattern? Abso-freaking-lutely. It's a fantastic pattern. Beautiful, tight, narrow range consolidation at a whole number, back to the rising moving average with a volume drop. Guys, check, 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 check. This is an awesome trade. But guys, it ain't any good if you can't get filled. No trade is any good if you can't get filled. They're worthless. So how did MNST actually play out? How did this really play out? Let's take a look. See, nobody else takes a picture of the level 2 of what actually happens in their courses. I do, because I'm a real trader. All right, let's take a look what happened. We all agree, beautiful pattern, 35-cent stop loss. Let's take a look. How'd that go for you? How'd that work out for you? That is 182,000 shares at $150. 182,000 shares at $150. And then what? Nothing, 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 nothing. Look at all the gray area. These are all the areas that filled no shares. 300 shares, 200. Guys, 35-cent stop loss. I'm taking 2,000 or 3,000 shares of this. Where am I going to get 2,000 or 3,000 shares? Look, 100, 300, that's 400, 600, 800, 1,000, 1,200, 1,550, and let's add 500. 2,050 shares in a 20-cent range. How are you going to get filled? The answer is you're not. The only way you're getting filled, on this is taking it at $149.99 or possibly $150. You're anticipating the entry. It's the only way you're getting filled on this. It's the only way. Okay? I'm not done yet. Let's do it again. All right, guys, another beautiful breakdown here, right? XON right there at $16.65. Stop is $16.95, 30-cent stop loss. Oh, right above the topping. Oh, it's beautiful. Big shakeout, topping tail. Nice tight consolidation back towards the declining moving average. Check, 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 check. Let's take a look. 1665, there are 37,000 shares. 1666, there are 155,000. Then what? 100, 300, 400. Ooh, 2,000. Then nothing, 700. Oh, you may have gotten filled 10 cents late. And remember, you had a 30-cent stop loss. So getting filled 10 cents late really messes things up, doesn't it? Because instead of having a 70-cent target, now you have a 45-cent stop loss. So now you need a 90-cent target and you got filled 10 cents late. So now your target is $1.05 and it started out at 70 cents. That's a problem. Most people got flat skipped on this. Why? Because most traders would give this like 3 pennies. They'll start their order at 1664, give it down to like 1661, and call it skip, 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 skip. Skipped. They got skipped. How great was that trade? It sucked because you got skipped on it. All right? Let's look at another one. Here's a beautiful breakout on INCY, INCY, over 120. What happened? 78,000 shares printed at 120 and then nothing. Absolutely nothing. You didn't get jack shit because you had to take it at 98, 99, or 00. And guys, I do. Okay? I do. Let's take a look at another one. Here is my favorite pattern in the world, a 3-bar play. Baidu, 2-minute 3-bar play. I put this on here because some of you are like, oh, well, that was an illiquid stock on the last chart. Baidu does like 5 or 10 million shares a day. Okay? Guys, at 177.50, wide bar, narrow bar, wow, what a perfect textbook 3-bar play. This is my favorite play on the whole planet, especially at 9:35 in the morning. How many shares were printed here? 900 total shares printed in a 32-cent range. How many do you think you would have gotten? Remember, you're not the only trader in the world looking at this. There are thousands of traders looking at this, and there was 900 available shares. All the way down about a 30, 40 cent range. What's the lesson here? Traders/patterns are only as good as the fill you get. Guys, this is an unbelievable pattern. Gap down under support. Wide range bar shows the sellers are in control. Narrow range resting bar says, you know what, we've rested just long enough. Let's continue the move lower. Boom. 177.50. Everyone else and all their textbooks, all the education out there. Oh yeah, just shorted at 177.49. Put your stop at 178 and ride the road to riches, the gravy train. Bullshit. And then they're putting out this fake P&L. Oh, look what I got. No, you didn't get filled. You didn't get filled. None of you guys are calling them out on the level 2. I go into these chat rooms and the guy's like, I got 8,000 shares of XYZ. And I look at the price that he put. It didn't print 8,000 shares there. How did you get it? Dark pools. Bullshit. No dark pools. My ass. I used to work on Wall Street. The average trader's not accessible to dark pools. Stop that garbage. You got skipped, and so did they. But they're flaunting like they got filled. Now, I'm going to teach you how to get filled on. You're going to get in a couple pennies early. You're going to put half your position at 51 and the other half at 49. For me, I'm going to put all my position at 177.51. All of it. And 177.50. Why? Because I want to get filled. And I'm good at reading the level 2. I know when these are going to drop. But I know I'm not going to get filled under 177.49. It's not going to happen. It's not going to happen. Okay? Now, let's move on from this because I don't want to give away too much information. All right? I don't want to give away too much information because I've already given you away too much. Kidding. Anyway, guys, so that is the difference between getting skipped and getting filled. But now I want to talk about trades that don't rip like this Baidu just did. Okay? This is a very important slide in this textbook. I'm actually surprised I'm even putting it out here for you guys. I've gotten so many emails from people about how I get filled on my trades. Okay? Well, here is a good guideline, and I'm not going to spend a lot of time on it because I'm not going to give you guys a $2,000 course for free online. This is 550 pages. You're getting about 4 pages, okay? You can imagine how good the rest of the information is in this book. I don't sugarcoat stuff. I get right to the heart of the matter. All right, all trades should be entered using a stop limit order, not a market order. What if you used a market order on that Baidu trade I just showed you? You would have gotten filled 50 cents late. No, I'm not shitting you. You would have gotten filled 50 cents late. That's why I use a stop limit. If it blows through your stop limit order, oh well. Oh well, at least you're not getting filled $1 late, 50 cents late, $1,000 late. So let's give a couple examples. So entry on ABC is $50. Oh, this needs to be corrected. Stop loss, we'll say, is $49. All right, look at that. Fix that in real time. Stop loss, okay, is $49.50. Okay, so you have a 50-cent stop loss. Your entry is here and your stop loss is here. Your stop limit should be about 10 to 15 cents. Everybody always asks me, well, how big should my stop limit be? Your stop limit should be about 20 to 25% of the size of your stop loss, and then add a couple pennies, right? See it here. How do you decide how much room to give it? Take your stop loss, divide by 5, and then add a couple pennies. So 50 cents divided by 5 is 10 cents. Add a couple pennies, it's about a 13-cent stop loss. You're going to share size for 58 cents. You're going to share size for the middle. You're going to start your order at $50, and you're going to stop the limit at 50.13. But you're going to share size for 58 cents. So if you wanted to risk $500, you're not taking 1,000 shares here. You're taking about 900. Taking about 900, okay? Because you're share sizing for 58 cents. Why? Why is that? Because sometimes you're going to get filled right at $50, great fill. Sometimes you're going to get filled at 50.10, not a great fill. So you want to share size for the middle ground so your risk is always within 5%. Right? You want your risk to always be within 5%. So if I'm risking $500, I want my risk to be right around 475 to 525 every time I trade. Every time I trade. Okay? Entry, $14.15. Stop, $13.99. It's a 16-cent stop loss. Divide that by 5. It's about 3 cents. Add a couple pennies, 3 to 5 cents. Share size for 19. Yes, you are welcome. Now you know how to never get skipped on trades. Okay? Anticipate half your lot. Give it your stop limit enough room, guys. Share size for the middle ground of the stop limit range. This is only a guide, as there are definitely other factors and considerations. The spread of the stock, the liquidity of the stock, how many shares you want, how many shares you need, how badly you want to get filled, the time of the day. They're all things that are all in this manual, guys. All right? So again, I'm here to teach you real quality information, guys. Free video, free of charge. This is only 4 pages out of 550, and you can see I don't fluff shit up. This is the real deal. So I hope you guys learned a little bit today from this video on how to get filled on trades, how wide of a stop limit you need to give them because all entries are stop limit orders, how not to get skipped, okay, on trades, and also how to be smart about the actual size of your stop loss. Remember, if you have a dollar spread on a stock, you got to give it at least a $3 or $4 stop loss, at least 3 to 4 times the size of the spread. If a spread is 15 cents, that stop's going to be 50 cents, maybe 60. Make sense? Guys, your number one job, money management, account protection. That is your first job. Making money comes after protecting your account. All right? I hope you guys enjoyed this video. Jared Wesley of Live Traders. And remember, if you haven't already done so, download Trader's Guide to Success. Trader's Guide to Success. And also, guys, real quick, guys, Professional Trading Strategies is unbelievable, man. Hardcover book. Hardcover, full color. Nobody has a hardcover, full color book out there, guys. That's 550 pages. And on top of it, it's 18 hours of video with me teaching every page by page by page. And you get an electronic manual on top of it. Jared Wesley, Live Traders. Have a great day, guys. I'll see you again soon. To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.